Hello and welcome to G Fun Facts Online, where we unpack the amazing science and tech shaping our world. Today we're talking about a revolution in the world of investment, one that could fundamentally change what it means to own something valuable. Forget just stocks and crypto. Imagine owning a tiny slice of a Manhattan skyscraper, a fraction of a Picasso painting, or a share in a massive solar farm, all from your phone. This isn't science fiction. This is the very real world of tokenized real assets. Let's break it down. At its heart, asset tokenization is the process of taking a real, physical thing, like a giant office building, and converting its ownership rights into digital tokens on a blockchain. Think of it like a super secure, digital deed of ownership. A single, expensive, and hard-to-sell asset can be digitally chopped up into thousands, or even millions, of tiny, affordable, and easily tradable pieces. Each token represents your fractional ownership. This is a game changer. Suddenly, an asset class famous for being illiquid, meaning hard to buy or sell quickly, is infused with the speed of the digital world. So how does this magic actually happen? It's powered by two key technologies. First, you have the blockchain. This is the foundation of trust. A blockchain is an unchangeable, transparent digital ledger. Every transaction and record of who owns what is stored permanently for all to see, which drastically cuts down the risk of fraud. The second piece of the puzzle is the smart contract. These are self-executing contracts where the rules are written directly into code. They automate everything from distributing rental income to shareholders to ensuring that all the legal regulations are followed, cutting out middlemen, lowering costs, and speeding everything up. In fact, Gartner predicts the use of smart contracts in real estate will jump by 50% by the end of 2025. The economic potential here is mind-boggling. We're talking about a $1 trillion opportunity. The market for tokenized real estate alone is projected to grow from $3.5 billion in 2024 to over $19 billion by 2033. But look at the bigger picture. The Boston Consulting Group estimates the entire market for all tokenized assets could hit nearly $19 trillion by 2033. For property owners and developers, this means they can access a global pool of investors and unlock cash from their properties without having to sell the whole thing. But the most exciting part is for regular investors like you and me. This is the democratization of wealth. High-value assets that were once reserved for the super-rich are now being broken down into affordable chunks. You can buy into commercial real estate or luxury properties for a fraction of the cost, allowing you to diversify your portfolio in ways that were previously impossible. And because it's all on the blockchain, you get incredible transparency and security. Of course, the road ahead isn't perfectly smooth. The biggest hurdle is regulation. Governments around the world are still figuring out the rules for this new digital frontier. But the future looks incredibly bright. We're already seeing the use of NFTs to represent unique properties, and the integration with decentralized finance or DeFi will unlock even more possibilities, like using your tokenized assets as collateral for loans. In conclusion, the tokenization of real assets isn't just a tech trend, it's a fundamental rewiring of investment and ownership. It's creating a more open, efficient, and accessible market for everyone. We are at the very beginning of a shift that will unlock unprecedented opportunities and transform finance for generations to come. Thanks for tuning in to G Fun Facts Online. Join us next time for another look into our incredible future.